Yeah, it's CC, the CEO. Wanna change your life? Come see me, yo. I'ma teach you how to build up wealth for your family, not just for yourself. I'm a bestseller, a house flipper, a businesswoman, a go-getter, a big investor, a goal builder. I can teach you to get richer like millions, baby. You really about to fill your savings. You about to have multiple streams to pass your children, baby. Let me teach you to get your credit on track in the long run. You'll make it all back at Catalyst and watch it all psychology black on firm, but we ain't all black.
What's up, everybody? It's your girl Constance Carter, and I got some really important information to talk to you about today. So thank you for coming in to the Grow Your Money podcast. This right here is my wheelhouse. What's up, Sophia? This is my wheelhouse because I built my career on helping people to build wealth and just trying to inform people about a lot of predatory practices that have gone on over the years. There has been just of course the powers that be, they target, the most vulnerable communities, and the most vulnerable communities have been in this country historically people who look like you, who look like me. So I want to have a conversation about this because I think this is very, very muy importante. So before we get started, I want you guys to share this page with people because they need to see what's going on, because not only is this affecting me, affecting you, but it's going to affect all of us, black, white, and everybody in between. But I really want you guys to just share this out with your people because they need to know. Okay, so this is one of the ways that black people ended up losing a lot of wealth just several years ago when that financial crisis hit. And so please, that's the first thing I want you to do is I just want you to share this, let everybody know, put everybody up on game, because I'm about to tell you some things that you need to know going forward and how you need to act and operate. Okay. So that's the first thing I want you to do is I want you to share this with the people that you love, that you care about, that need to know how to protect their money, how to grow their money, how to. First thing. Second thing is, every time I go live, I always want to shout you out, and I see hundreds of people are coming in here. So I see Sophia over there from Stockton. Thank you. Sophia, I appreciate you. You always coming in, chiming in, be waiting. So what's up, y'all? Just put in the comments where you're watching from, because I like to shout you out. I know we have people that are watching from all over the world. What's up, Doug? I ain't seen you in a minute, homie. What's happening, big homie? What's up, Stephen Hodo? And where else is everybody watching from? Because I know we have people that watch from all over the world. I know that yesterday I think somebody was from Australia. We have people from Africa and Asia and Canada and in the Caribbean. So where are you watching from? I want to shout you out. So let's make that okay. What's up, Chris from Fort Worth? Yes, what's happening? And then I see Not Enough Said from Virginia, not too far from me. Gino from Charleston. Keep putting them in the comments, okay? Make sure you like and share and subscribe too. Now, I have a YouTube. If you are watching from Dr. Boyce Watkins' Black Excellence channel, that's great. Keep watching over there. But I also want you to go to Constance Carter, my YouTube page, because I ain't got 500,000 subscribers like Boyce or the Fly Nubian Queen channel. So make sure you subscribe to I am Constance Carter as well. So subscribe to I Am Constance Carter because I also, more than just coming here live, I also put other videos, things that I think that you would love and enjoy and appreciate. So that's the other thing. The other thing is, it's all about collective economics with me. I am so passionate about making sure that we aren't left behind. I'm so passionate about making sure that we, they said that in 2053, our wealth was going to be a zero. And I'm always say they messed around and gave us the internet. They messed around and gave us each other. Okay. So you now have the information, you have sources and resources, and you have people who are giving you real good information. And so we have to, if we want to push our people forward, we have to practice collective economics. So if you have a business, I want to put you in the comments. I want to shout you out. If you have a product, if you have a service, yes. Chris already know, put it in the comments. That's right. What's up, lovely JR? So if you have a business, a product or service, put it in the comments. And what I want you to do is I want you to put, what your business is, where they can find you. So if it's online, go online, your website. And if you have a phone number you want to give out, because I want to put you on the screen and I want to give you a shout out. Okay. Because, here's the thing. It takes a lot to become a business owner. It takes a lot to step out on faith. And with everything that's going on, it is imperative that we have multiple revenue streams. And I know they talked about that on Fly Nubian Money yesterday, but it's imperative. We have to. I remember when I was first introduced to the real estate business, and I'm just selling real estate, and then I felt I was scared because if the ball ever dropped, if something ever happened and I'm only depending on this one revenue stream, it always frightened me. And so I had to make sure that that I was able to have multiple things coming in case this got a little slow. I still have that, and now I'm not desperate to close a deal or to get that sale because I have other things going on, and now I can just really operate out of abundance and out of the things that I do, and that's really just helping people. And so when you have multiple revenue streams, you're not operating out of angst or desperation. You're really operating out of purpose. Okay. So it allows you to operate at a purpose. So if you have a business, you have a product or a service, I definitely want to shout you out and put you on the screen. He said, put my channel in the comments. Thank you, Chris. I'm going to do that. YouTube.com/I am Constance Carter. I'm going to do that. Thank you. Put that in the comments. So wherever you're watching from, you'll see where my YouTube channel is. I don't want you to leave this channel and go over there just yet. I do want you to, continue watching on this channel and make sure you subscribe to mine so that you can get notifications and things when I do put a content out. Okay. So, all right. Let's see. What's up, Brashawn? Oh, okay. You tagged somebody. Thank you. Cynthia's from Michigan. Okay. Y'all ready? Let's get to it. Because this is important. I want to talk about the CFPB. It's shutting down and what that does. So you know that the federal government right now is dismantling everything. And a lot of our protections, on one hand, I can't say this guy is a tyrant and he's a dictator and all of those things. So I can't say on one hand, I could say that it's total chaos in Washington. It's chaos and mass confusion. And you got to think about who this really benefits. And the reason why I wanted to talk about the CFPB shutting down, because who it benefits are the rich people. Who it benefits, actually, when the CFPB came into existence, I was in the real estate business and actually put a lot more regulation and restrictions on us being able to do business, which actually decreased our ability to do certain things because all the restrictions, when you have, I'm gonna go ahead and get comfortable. When you have like a lot of Democrats in office, you have a lot of regulation. When you have Republicans in office, you have a lot of deregulation. Okay. And so deregulation leads to things that cause, predatory, it could cause predatory practices, but regulation or deregulation. No, regulation also handcuffs a lot of people so that you can't do business in the way that you want to do it. And so sometimes you don't have access to certain things because of a lot of regulation. And so what happens with these two entities, the Democrats and the Republicans, there's really no happy medium. Either you're going to be super duper regulated or you're going to be super unregulated. And then, then who becomes the victim? You. And so that's why it's so important that you're informed on things like this, because they really do affect you. If this what I'm telling you today, it affects you. And like I said, the reason why I'm so passionate about it is because this is the thing that kind of holds back, us and being able to build wealth and the wealth gap. Okay. So I know some of you guys are thinking like, what's the big deal? What is the big deal? Well, let me tell you, it's a very, 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 very big deal. Because when they go away, again, Black communities who have historically been targeted by predatory lenders and shady financial practitioners, they're going to start popping up again. Okay. So so the CFPB, the Consumer Financial Protection Bureau, was created after 2008 when the economic disaster hit us harder than anybody else. Now, I was in Stockton, California. Stockton, California was the epicenter of the foreclosure crisis. During that time, it was just, for me, it was just a sort of a hodgepodge of things that was going on. On one hand, I'm a broker. I'm a broker. And so in 2009, 2010, I opened up Catalyst, but 2008, when all this stuff was going on, I got my broker's license in 2006. So I was doing a lot of business, right? I was doing a lot of business because there was so much foreclosures. I was doing 300 homes a year. Like I was selling so much real estate, but also I had a lot of expenses too. So I had filed bankruptcy in 2009. Yeah, your girl was out here selling hundreds of homes per year, but I also filed bankruptcy in 2009 because I ended up getting one of those loans for myself, not even knowing. I'm 32, I'm 32. I'm trying to build wealth. I'm not really understanding how. And so I get one of those. I get a couple of them. I get a pick a pay loan on one of the properties that I purchased. So the pick a payment loan, that was a negative amortization loan. And what that did, and they outlawed all those with the CFPB. What that did is that said, okay, we're going to start you off with a 1% interest rate, right? So we're going to get you in this home so that you could afford it. First of all, we had stated income loans. So if you was a janitor make $20,000 a year, he can get that $1 million mansion. That's how we were putting people in houses, right? Not we. I did none of that. I will say that I did none of that predatory lending. But that's essentially what people were doing. You a janitor, you make $1 million, you get in this $1 million home, and you can't afford it, and you may make a payment or two, but then you're going to end up foreclosing, right? And so then they had these pick-up payment loans where said, okay, your interest rate is going to be 1%. So even though, the fully amortized loan should be $5,000, it's going to be $1,200 for the first 6 months, the first year. And all the principal or the interest that doesn't get paid, because we have a 1% interest when the interest should be, say, 5%, all that interest, it goes back onto your principal of your property. So you have a $500,000 loan, but you're only paying 1% of the interest. So it's accruing on your mortgage payment. That's what was happening. So people were getting these horrible loans. And so by the time you go into the fully indexed payment, that 5,000 may turn into 6,000. Now you're like, shit, I can't afford this. Well, you made $1 million a year. That's what you stated. So you should be able to afford it. And so a lot of people were unable to afford it until they ended up losing their houses. And so then they banned those loans. They banned stated income loans for people. Now, stated income loans at the time, they were for people like me who are self-employed. Now, the reason why the CFPB is bad for people like me is because you have a lot of self-employed people who who write off a lot, we'll say. They write off a lot on their taxes. And so their income doesn't really match what they really make, right? So you could make $500,000 a year, but maybe on paper you make $50,000 a year because you have all of these write-offs. Because as self-employed people, we try to write off everything. So these stated income loans were for people like that who, even though they wrote off a lot, they really could afford, a little bit more. But they were giving those to everybody. If you worked in as a janitor, if you worked in the mailroom, you was making $1 million, or you were making $200,000, and you were getting these expensive ass homes that you ended up foreclosing on. Well, what that regulation, with that CFPB regulation, the negative thing that it did for people who were self-employed like me is I can no longer get that kind of stated loan for a house that I want to live in. So those are outlawed with the CFPB. Boom, gone, right? So now if I want to get that type of loan, I can't, if I want to get a stated income loan, it can't be an owner occupied loan. And I have to, there's all of these other things that I have to do in order to be able to comply. So CFPB regulations, they didn't really leave room for the happy medium. Okay, maybe you don't have a stated income loan for everybody, but maybe you just have a stated income loan for self-employed people. Okay. And oh, by the way, I'm seeing people come in here. So make sure, like I said, you subscribe to I Am Constance Carter, to Boyce Watkins, to the Fly Nubian Queen. And I'm giving away a special gift of, how to increase your credit score quickly. Text Constance to 87948. And I will get you over a download, a free gift, how to increase your credit score quickly. Okay. So back to your regularly scheduled program, back to the CFPB. So that's the reason why it's always really tough when you have Democrats and Republicans, because there seems to be no happy medium when it comes to regulation. It's either unregulated or super regulated. So what happens is the CFPB, they were a watchdog, basically. And they weren't a huge entity. So they weren't costing the federal government a whole lot of money. But what they ended up doing is they ended up finding a whole lot of money for a whole lot of people, because they regulate predatory payday loans with sky high interest rates. Anybody here ever seen anybody? I don't want you to even admit it. But do you know anybody who's ever had a payday loan? You don't got to admit it, but you can raise your hand if you know anybody who's ever had a payday loan. Well, they have exorbitant fees. It's almost usury. It's almost illegal. Well, the CFPB was regulating the payday loans, right? Mortgages. There was discriminatory practice all over the place. So they were so we know that redlining, this predatory lending was happening to us at a very disproportionate rate. We were getting, and Hispanics too. I'm Hispanic, especially if English was their second language. I had Hispanic clients that were getting the shaft, and I would go back to their lenders. This is when I was just doing real estate. I would go back to their lenders, and I was like, you cannot do this to these people. You cannot do this to these people. And because they didn't really understand. So when you have, again, your most vulnerable people, these deregulation, it allows for a lot of predatory practices to happen. So you have, these mortgages, credit cards, the interest rates that they're charging, the fees, the hidden fees, student loans, debt collection. They were doing these debt collectors. I had a debt collector call me one time it wasn't even my debt. And I was like, I'm sorry, this is not my debt. And this man is yelling and cursing at me. Like they had these really barbaric tactics because they were trying to scare you into paying these bills. And there's things that you could have done. You were protected. The CFPB was exposing. And this agency, again, they cost the government less than $1 billion or something like that. Auto loans, those high auto loans, again, bank accounts, they were opening up accounts. They were charging hidden fees. They were doing so many things that were predatory. And guess who was affected the most? Can you guess? Can you guess? People that look like you. So what the CFPB, what their goal was, is to ensure that you as a consumer, you have access to fair and transparent and competitive financial markets. They're a watchdog. They were holding these institutions accountable for their wrongdoing. And they were ensuring that people understood their rights. Now, why would the federal government want to take this protection away from people? Why would they want to remove this watchdog? Okay, why? Because big banks, the people who got all the money, what happened? Those are the people who did not like these regulations. Elon Musk, who is really our president, he doesn't like regulation. So he's trying to get rid. And this is also helping his people over in Silicon Valley. These are also helping his cronies, because they're able to make more money off of your backs. Okay. So why would they want to remove that protection? Because then these people can make more money. They can target people like you. They could have all these junk fees that had to go away once the CFPB came into play. They can operate in the shadows without transparency. Yep. So with you not having that protection in place, it's like the wild, wild west for you. And we know that a huge percentage of predatory practices has gone against our people. And let me just tell you, so back in since then, I think they've recovered. So let me see. They've recovered billions and billions of dollars for for folks who, do I have the information in here? Let me see. I know they've recovered again. They only cost the federal government less than $1 billion, but they've recovered billions of dollars in fees that went back to the people, but in fines that also went to the federal government. So you think about this: you have an entity that's not costing the government any money, that's actually making the government money when they're able to regulate these financial institutions, and they're finding these financial institutions. So they're making money from the CFPB, but now they're eliminating it. Okay. So you got to follow the money. You got to follow the money. So let me just tell you about a few of the banks that were, excuse me, my throat's getting a little dry. A few of the banks, and I talk about this in 2023 because some of these banks were fined in 2023, 2024. But Wells Fargo was fined $100 million for the widespread illegal practice of secretly opening unauthorized accounts and credit cards. Okay, that was in 2016. Then in 2023, the CFPB ordered Bank of America to pay another $100 million for customers for systematically double dipping on fees imposed on insufficient funds. That's why if you have a Bank of America account, you know that you see that your fees have gone down significantly. So where it used to be $35, now they're charging like $10 for these same fees. Okay, and they were withholding reward bonuses explicitly promised to credit card customers and misappropriating sensitive information to open up accounts without the customer's knowledge or consent. So they were fined not once but twice. $100 million, 2016, and then in 2023. And then, in some of my previous podcasts, I go down the list of at least about 10 banks that were fined here recently, but I'm just going to give you four. Okay. So US Bank in 2022 was fined $37.5 million for illegally exploiting personal data to open up sham accounts for unsuspecting customers. Yep. And then TD Bank was ordered to pay $7.6 million to tens of thousands of victims because of the bank's illegal actions, in addition to $20 million civil penalty. Okay. So those are just four. But you look at a lot of these mortgage companies that have they have junk fees that they have put so what happened between 2005 and 2009, you have two borrowers that look exactly the same. One look like me, one look like Becky. We have the same credit score. We have the same type of income, assets, but I get a higher interest rate. Why? Simply because of the color of my skin. That's what the CFPB was able to eliminate a lot of, as these discriminatory practices. You also have, with the CFPB going away, is no reporting factors of a lot of racial and ethnic backgrounds of certain people. So with them not recording that information, we're not going to know what type of predatory practices are happening to people in our community. And so with that being said, you have a lot of us that are super duper vulnerable. And this is what's happening. This is what the federal government is doing. Now, the federal government is supposed to be, and that's the reason why, this was put into place, is to protect you. The Consumer Protection Agency, CFPB, the Consumer Financial Protection Bureau, was for that very purpose. It was to protect you. And now with that being stripped, now it makes you more vulnerable. So here's what I need you to do. I see Brenda said she's still in the midst of that with her mortgage. Are you still doing please don't tell me you're still doing a pick a pay loan. Deontay said it's the individual's responsibility to ensure they have adequate information and education before engaging in any transaction or acquiring any asset. I'm with you in opposition to predatory lending. That's it. You're right about that, but also it's also the responsibility of people to do ethical business and have ethical business practices. And so while, you walk into a bank and you don't think I walk into a bank and someone is going to, give me a worse loan if all things being equal. For example, and this is not a CFPB thing, but this is what I also want you to be aware of. I called my cell phone company back in December to make a payment. I was on like auto payment for like a couple years. I just had auto payment going on. I had bought a couple of Apple Watches and I got T-Mobile. And so I had went and got a couple Apple Watches. So I'm paying. So now my bill's gone up a little bit, but I'm not really tripping. I'm like, okay, maybe that's the Apple Watch. But because I'm on auto pay, I'm not really noticing. And this is the reason why I'm telling you this story, is because this is exactly what happens in these types of situations. Okay. And this is also something I want you to be aware of. So I get off auto pay because I changed my bank account, and I call them in December and I'm like, yo, I need to make my payment, but can you just, let's do it. Cause they do like an audit of your account. And so I said, okay, well, I want to make sure there's no extra accounts on there. Well, there were 2 accounts on there that I didn't know. When I walked into T-Mobile, the person who helped me with the Apple Watch also put 2 additional accounts on my account, because of course they get commission. And I'm not knowing. So for 2 years, I'm paying for another Apple Watch. No, I'm paying for another phone line, and I'm paying for internet service. And if you look at it, there was never been any use on either of those. Right. So, so I'm like, y'all got to refund me. This has been going on since March of 23. So now I'm at 18 months or something like this. So I'm like, oh, y'all got to refund me. And they're like, oh, we can do 3 months. Wait. I walk into your store to get service. And so when you say it's up to the person to have, the financial knowledge, Deontay, when you said it's up to the person to have, they have adequate information, right? But also they don't expect to walk into a store and that they're going to get ripped off. Okay. So I call, I'm talking to him. He said I could authorize 3 months. I'm like, absolutely not. It's been damn near 2 years. So no, you're going to give me all of my money. So then I go to supervisor. They're like, okay, we can give you, oh, we can't do more than 3 months. Okay. So that's all y'all can do. All right, cool. So I'm going to contact the Federal Trade Commission, the FTC, and I'm going to write a letter to them because this is unfair. So you mean to tell me you hire somebody? You got me on auto pay, right? I'm on auto pay so I could save some money. So you got me on auto pay so I could save a little bit of money. And your people put something extra on my account, and because I didn't know, because I'm automatically paying, I got to pay for this, and I have no idea. Oh, absolutely motherfucking not. So I called, so I reached out to the FTC. FTC reached out to corporate, and their corporate is still like, okay, we'll give you 6 months. No, I don't want 6 months. So, okay, well, that's all we can. Okay, we'll give you 12 months. It's been almost 2 years. I want every single penny that was taken from me. I didn't authorize this. As you know, I did not authorize this, nor did I ever use it. You can see there's no activity on these accounts. Your person did this with no authorization, and you want me to pay I'm not paying a freaking dime for this. And I will go up the ranks until you guys take it all off my account. You mean to tell me that y'all gonna put something on my account and then y'all gonna make me pay? Like, that doesn't even make human sense. But this is where that having these watchdogs in place helps the consumer. So that's why I contact the FTC to say, yo, these people only want to give me, and they're like, because when I'm talking to them, I'm like, okay, I need to go up the ranks. Well, this is the highest we can go. Okay, well, then I'll make sure that So to this day, this is even up until like 2 weeks ago. They told me, okay, we can do 12 months. And I'm like, yeah, no, that's not going to work for me. So I'll go ahead and make sure that I follow through with my complaint with the FTC, because what you're not going to do is you're not going to charge me and then say that I have to pay. Well, this is our policy. Well, then you need to change your policy. So first of all, so there's 2 lessons here, right? 2 lessons is make sure that you're checking your stuff. But I'm the victim. So yeah, it is our responsibility to get understanding, get knowledge, but I think I'm pretty savvy. I think I'm pretty, I'm pretty astute on certain things. But as we're busy and we're doing certain things, there's certain things that you just think that other people are supposed to ethically do. I don't think that I'm supposed to walk into a T-Mobile store and ask for an Apple Watch, but then I get 2 other accounts on my account. 2 other things on my account, and now I'm paying for something that I don't even have, or nor am I using, and you still want me to pay because, hey, it's been on your account all this time, and you should have known. Well, how should I have known if I'm on auto pay and then I don't even get a paper copy of the bill because you told me to get on auto pay so I could save some money on my payment? So it's like, so I'm the consumer. I shouldn't be responsible, and that's the reason why the CFPB is so important, because of things like that. Okay. So, but it's a lot of shady practices out there like that. So here's the thing. It matters. What can we do? What can we do? Well, first of all, we need to start banking with people who look like us. We need to start doing business with people that look like us. But here's the thing. People like you, it be your own people sometimes. It be your own people sometimes, because you think about in areas that were concentrated with a lot of predatory lending. So you have in other areas where they were going to Bank of America, and Bank of America was just giving Black people worse loans because they were Black. But then you have areas, say like Atlanta. There was a lot of foreclosures in Atlanta, and the people who were originating loans were Black people. But here's the thing. They weren't doing it based upon discrimination. They were just giving everybody bad loans because it was giving them more money in their pockets. It was just an unethical thing to do. It wasn't because of the color of their skin. They weren't saying, I'm going to give you white person, this good loan, and you Black person. They was giving everybody who came to them bad loans. So it's important that you go to people who are going to look out for your best interests. I say also, one of the things, take your money out the bank. Take your money out of these commercial banks, okay? Take your money out of these commercial banks. So let me just give you a strategy that I do, okay? I took a bunch of money out the bank, and if you've heard me before, you'll understand that I took my money. Of course, you have your money in the bank for the things that you do every day. I pay bills out of there, but for like my larger savings, I took that money out and I put it into vehicles that generate compound interest. Why? Because Einstein said compound interest is the 8th wonder of the world. This is how wealthy people stay wealthy. When you look at Ray Kroc of McDonald's, he used compounded interest. When you look at the Rockefellers, compound interest. So what I did is I put my money into, say, an IUL, right? So my money is not in the bank, because what's happening is you are getting 0.23% interest on your loan, on your money. So you putting your money in Bank of America. Bank of America is taking your money and they're giving you 0.23% interest on it. So if you guys on Chat GPT, do this for me real quick. And this is what I do to all of my the people who are in my real estate mastery training. I show them how to calculate certain things and to become self-sufficient. Okay. So if you got Chat GPT on one of your tabs, this is what I need you to do. And oh, by the way, for those of you who are interested in real estate, the B1 Real Estate Mastery Training, we're still doing that. This is a year-long training, and go to b1realestatemastry.com. This is something that I'm b1realestatemastry.com. I'm gonna put it in the comments. Go there if you're interested in becoming a real estate investor and becoming a real estate expert and real estate master, so that you don't have to deal with stuff like this. Not even think about even promoting that, but this is one of the ways that you can kind of insulate yourself in getting educated on this. But go to b1realestatemastry.com, and this is something that we're doing with the Black Business School to help to be able to insulate you from these predatory practices, y'all. So anyway, b1realestatemastry.com. I'm gonna just make sure that b1realestatemastry.com. Go to b1realestatemastry.com. I think I have a coupon for you guys to get like 50% off. Let me see if that coupon, I think the coupon still works. Hold on. Give me 1 second. So let me look for some coupon. There's a coupon code that you can still get the B1 Real Estate Mastery off. And I'm looking for it. Y'all, excuse me for my dead side. Oh, okay. Let me tell you what it is. Oh yeah, you can get half off of this. Let me give you the coupon for that. Coupon code. And Eartha, there's more than just the IUL. There's other I'll address you in a minute. B1, I think it has to be capital. B1 Mastery Referral. If you are interested in taking that training, we're in action, investing in real estate and as a community. So if you're interested in taking that training, that's through the Black Business School. I am the instructor. We have trainings twice a month, and I am taking you through the process of not only showing you how to invest in real estate, but become a business owner. Because a lot of times when you take these trainings, I'm gonna show you how to flip the house. No, I'm showing you how to build sustainable businesses. We ain't just flipping houses and all that shit. I'm gonna show you how to build your business, your LLC. I'm gonna show you how to reduce your tax liability. I'm gonna show you how to increase all the things in your protections, and to build joint venture partnerships, and then be able to connect with people, other like-minded people who are interested in maybe even investing with you. Maybe you don't have all the money, but you have other people in this community that are interested in practicing collective economics and investing together. So if you're interested in the B1 Real Estate Mastery, took a little moment out for that, but the B1 Real Estate Mastery, go to b1realestatemastry.com. Let me make sure, y'all. Let me make sure I'm giving y'all the right code. B1 Real Estate. Yeah, b1realestatemastry.com. Yep, go there, and then you put that coupon when you go to log in. And I'm sure, and if the coupon code does not work, let me know, and I'll tell Chanel, who's with Boyce's team, to put it back up there. But that's the coupon code if you want to get into that training. B1 Mastery. No, that's not even it. Oh my God, it's B1 RE Mastery. Sorry, y'all. B1 RE. Sorry. I got so much more to share with you, but I just want to make sure that you guys get this opportunity and you don't miss it. B1 RE Mastery Referral. B1 RE Mastery Referral. Okay. B1 RE Mastery Referral. B1 RE Yep, that's it. So if you're interested in taking the B1 Real Estate Mastery so that you can be able to just not even have to deal with this, and you understand and because that's what I'm teaching these people. And if anybody's on here in the B1 Real Estate Mastery training, you could let them know what you're learning in here, even in the comments. I would appreciate it. But what I want you to do, if you have Chat GPT up, I want you to do this real quick. Ask Chat GPT, if I put $10,000 in a savings account with a regular bank, the interest rate is 0.23%. What will I earn in 5 years? Okay. All right. So that's the first question I want you to ask. Then the second question I want you to ask Chat GPT is, now I'm giving you a little training. If I take this same $10,000 and I put it into an account that generated compound interest, and in these accounts, you're looking at anywhere between, say, 5 and 10%, sometimes 12%, but let's just say 7%. 7% compound interest. What am I going to make on this money in 5 years? Okay. So I'm going to do it with you. I'm going to do it with you. So where's my Chat GPT? Okay. So I'm going to say, if I take $10,000 and put it in a bank account with 0.23% interest, what will I make in 5 years? Does anybody have the answers yet? Because I'm in Chat GPT right now asking. So $10K in the bank, 0.23% interest. What will I make in 5 years? Anybody know? Anybody say it in the comments? Not yet? Come on, I know somebody got Chat GPT over here. What y'all doing? All right, so Chat told me you will make your $10,000 if you put it in Bank of America and their interest rate is 0.23% interest. You are going to make $115.53 off your money. Okay. Now take that 10K. So that's how much you made. 10 years. Fucking with these banks. Now that same 10K, you put it into an account that generated compound interest of 7%. Compound interest of 7%. What will I make in, what did I say? 5 years. Okay. So let's see what Chat GPT said that will make. If we take the same $10,000 and we put it into a vehicle for 10 years and we just let it sit. When we have compounded interest, again, remember, Einstein said it's the eighth wonder of the world. So that same $10,000, you just made $4,025.52. Okay. You made $4,025.52 as opposed to $153. So what happens is the bank, so this is how much money you made. If you took that same $10,000, you took it out the bank. I know y'all got CDs. Okay, your CD is making 2%. But and then compounded interest, right? So it's compounding. So the other thing he said is those who know about it may earn from it, and those who don't, they pay it. Because on the same token, which is also regulated by the CFPB, is you have credit cards that charge you compounded interest. Okay. So, and this is some of the things that I teach to some of my students. So say you have a credit card, you have $1,000 on it. If you pay the minimum payment, you're paying compounded interest, and it's going to take you 20 years to pay off that $1,000 credit card if you're only paying $25 a month and your interest rate is 29.9%. That's compound interest. So those who don't know about it end up paying it, and those who do end up making money from it. So that bank that you got your $10,000 in, they're taking your money and they are investing it into vehicles that generate what? Compound interest. So they're making that $4,000 and giving you $153. Cold world. So now with the banks doing that, now with the CFPB gone, so not only are they going to make money from your money if you keep putting your money in the bank, but they're also going to have hidden fees. They're also not going to be regulated from having all these hidden fees that they've had over the years. The reason why they were fined $100 million is because they were charging you hidden fees that you didn't even know about and you didn't even see. So when they had these class action lawsuits and they had to pay this $100 million, well, of course, the lawyers got the good share of it, the big share of it, right? You might have seen a check for 25 cents or something like that. And the federal government ended up getting payments from fines from these institutions. So CFPB is now rolling back the CFPB. Now you lose those protections. Um, Teresa said, I love compound interest when it's staying in my house. Yeah. So putting your money in the bank is almost like keeping cash in the house. I used to keep cash in the safe. I wasn't like Elon Musk when his daddy said we had so much money we couldn't even fit it all in the safe. I had actually I did. I had a small safe, right, and I had to punch it in there. But it's all, and that's because I have a marijuana dispensary and we couldn't use banks. But it's almost like the same equivalent. Putting your money in the bank is almost equivalent to me keeping my money in a safe. Does absolutely nothing. It's not making me no money. It's not doing anything. It looks nice. It looks pretty when you're able to go in there and check your balances and you see that you have this money in there, but it does nothing. And for us Black people, we need to learn how to use our money to make more money. That's the reason why I have the Grow Your Money Club too, is because I'm showing you how to go from being an employee, like a person who's just generating regular money, right? So you're working, and every day that you work, because you are an employee, the only amount of money that you can make is the amount of money that the market allows. So you can only work so much, and you're only going to make so much. Okay. But when you become a self-employed person, right? So if you go through that cash flow quadrant, if you're a self-employed person, you go from being an employee to a self-employed person. Well, now you can make as much money as you want to, but you still have to use your time and effort, right? So then if you become a business owner, like I'm a business owner, or you have processes in place that allows you to allow other people or other things to make you money while you sleep, right? So now you want to go from being an employee, maybe self-employed. Self-employed is cool. Even some doctors are self-employed that don't have their own practices, lawyers, real estate agents, self-employed people, right? But then you want to go from being a self-employed person where you still have to put your time and effort to make money. Now you want to go to a place where you're using other people to make you money, right? So other people are the systems. Ultimately, you want to get to a place where your money is making you money, and that's the investor. So that's what I actually teach in the Grow Your Money Club, is I show you how to go from being that employee to that investor, right? First starting with the foundational things, and then getting you all to a space where now your money is making you money. So for Grow Your Money Club, this is the Grow Your Money podcast, but in the Grow Your Money Club, I have like over 30 videos. Let me just show you. It's Constance Carter, your wealth activist, and it is time to get in the gym. The Grow Your Money Club. The Grow Your Money Club is a 12-month comprehensive training where I teach you how to build a sustainable business and go from being an employee to an investor. Go to growyourmoney.club to sign up today. Hey, but I use that model, which is the Robert Kiyosaki cash flow quadrant, to show you how to go from being an employee over to an investor, because ultimately that's what you want to do. And I'm fortunate that I've been able to make some cool investment decisions, marijuana dispensary, the real estate investments and all of that. So when I had to move and do all those things, I was okay, is because my money makes money for me, right? So that's whatever I do, I try to teach you everything I know. So that's what the Grow Your Money Club is about. So if you're interested in that, go to growyourmoney.club. I have over 30 trainings for you to, go through, and it's a 12-month process. But once you finish it, you will go from being, who am I? What do I do? To actually having the knowledge, the base, the information, and a business and businesses, revenue streams in order to build your business. So if you're interested, go to growyourmoney.club. I would love to see you over there in the Grow Your Money Club. All right. So let's go back to building wealth. Okay. So what can you do, Black people, to be insulated? What can you do? I just said, Grow Your Money Club. Financial literacy is your superpower. Okay. So you have to educate yourself. You got to educate your family. That's the reason why I love working with Black women, because Black women, and I'm no diss to Black men, but that's one of my mission and my purpose in life is to help Black women, because we got to close this wealth gap. And we hear it more often than not, especially now. But I did a TED Talk back in 2020. It's called Google That Shit. And I talk about ways that we can close the wealth gap. But that's really my passion, y'all. It's really my purpose to help us do that. And so that's the reason why I work with Black women with the Net 7 Collective, is because I just believe women are just those people who, you give us something, we're going to multiply it. You know, you give us a house, we're going to make a home. You give us a meal, bacon, we're going to make a meal. You give us a seed, we're going to make a baby. We're going to multiply. We're going to multiply. So, but we have to be willing to share this information, not only with ourselves, right? You share it with your family. Okay. So the African proverb is, when you teach a man, you teach an individual, but when you teach a woman, you teach a nation. Men, you got to teach your families. Women, we got to teach our families. We got to be like the Jewish people. The Jewish people said, listen, we sit down at the dinner table and we talk about money with our families. Yeah. They also said, we don't do business with anybody else outside our communities unless we can't find nobody in our community to do it. So they practice collective economics. They teach their family about financial literacy. One of the things that we have within our families is we don't know financial literacy. So how are we going to teach our children? Well, you got to get informed. But you got programs like this. You know, Dr. Boyce, you know, he's always teaching financial intelligence. You have the Fly Nubian Money, where they're always talking about how we can build our wealth. So you being here, you know, there's 1,000 people that are on here between all the channels right now. By just by you being here, you are learning. So the next thing from learning is to share. Okay, implement. I always say, if you work with me, if you are a student of mine, or if you are a mentee, or I coach you, one of the things I always say is, I don't want you just to be hearers of the word. What does the Bible say? Be doers of the word. So I don't want you just to be here listening to me. I want you to share this information. Whether you say you could basically parrot everything I'm saying. I don't give a damn. I don't need credit, but just share this with your community. Let's be like those Jewish people. Not only just knowing it, but they sit down with their family at the dinner table, they discuss it, and they only work with themselves. Okay. The other thing is, just like my brother said, is we got to get educated. So understanding the fine print before we sign it. You got to understand, so that's the reason why taking these trainings and investing in yourself is so important, because then you'll know, okay, I know that this is what this is supposed to be. This is what it should be. And here's the thing. If you're working with a lender, or if you're working with anybody who you're doing finances with, and they can't properly explain something in the way that you understand it, don't work with them. They don't get paid until you commensurate with the transaction. They don't get paid until you close. Okay. And so if you don't understand what it is they're talking about, if you feel like they are not, they're brushing you off, or then go to somebody else. I don't care if you are in the thick of it. If they're not giving you the information that you need, they're not being super transparent. If you have, then they're brushing you off. Don't allow you spending your money. And even if you're getting down payment assistance and everything, even somebody else can do it. Okay. But don't ever put your money anywhere where somebody is not giving you the information and you don't fully understand it. Okay. And then you got the power of the internet. They didn't f***ed around and gave us the internet, which is the great equalizer, in my opinion. Okay. So now you have opportunity that you did not have before. Okay. So make sure that you're reading the fine print before you sign anything. Ask questions. Knowledge is power. That's your first line of defense. Support Black-owned businesses. Let me show you. I got a list of 20 Black-owned businesses in this country. I want to show you. So right now, you can pause it, whatever, but I want you to take a screenshot of this, and I want you to start supporting Black-owned businesses. So if you got to do, so say you don't have the wherewithal to put your stuff into a vehicle that generates compound interest. And like I was saying, it could be a Roth IRA, it could be other things that generate compounded interest. Okay. So it doesn't have to necessarily be an IUL, because I know you said you couldn't get something because you're military, but it could be something else that you have it in to where you can, that you're generating compound interest. So what I do with mine, just so you know, is I have mine in this vehicle and I created my own bank. So I have my own bank, right? So I have money in the bank. And so if I'm making a big purchase, I end up borrowing from myself. The cool thing about being able to borrow from myself is it's my own money. But my money that I had in there, so say I have $100,000 in there, and I pull $50,000. So initially I'm making money on this $100,000. Well, when I pull the money, I still am generating compound interest on the $100,000, even though I pull $50,000 out. So I get that. I get the life benefit, right? The life benefit, and then I get the death benefit. That's the cool thing about having this IUL, is because I have all those things and I'm getting a high interest rate on it. And then there's, even when the market drops, you don't see a shift in, in the interest that you're getting. You're not going to see a huge bottom in the interest that you're getting. So that's the reason why I love that for me, but it may not be for you. And it's okay. There's different products that you could that you can get, that where you can get, you can generate compound interest. But if you cannot, bank with black owned banks. Okay. Now have you ever, I'm gonna do a black history spotlight on the Freedmen's Bank, how they took them people's money, how the government took those people's money. But we still have a lot of banks that are still available to us, black owned banks. So look, I want you to take a screenshot. I have a second page too, but I want you to take a screenshot, and it could be a bank that's near you. It could be a bank that's not near you, but here are black owned banks. So I want you to take a screenshot of that. I want you to take a picture of it. You can pause it. You can come back, whatever. Okay. So that's the first page of black owned banks. Okay. Here's the second page of black owned banks. Okay. So they've been around for a long time. And I can go into the history of how they did these black owned banks back in, after the Civil War. And, they've done a number on us, and they continue to try. But that's why it's so important that we are vigilant about our finances, about our money, about our wealth, about our legacy. We have to protect it ourselves, because they are stripping away our protections every day that we see what's going on in this administration. Our protections are getting stripped away. Okay. So support black owned businesses and credit unions. There was an article that I did that went viral last year, and I was talking about how Charles County in Maryland, which is now I'm in Prince George's County. And I guess I came here a little too late, because at one time, Prince George's County was the wealthiest county, black county in the country. Now it's Charles County, which is still cool. Like, hey, you could be one, we'll be two, whatever. But at least we have a lot of black wealth in these counties. And so they were supposed to be opening up a credit union over in Charles County, Maryland. And that was going to be like the first one, I think. I'm not sure. But I remember Black Enterprise did a story about that, and I pushed it out. But anyway, so One United Bank, Liberty Bank, those are all rooted in community, and they often have fairer lending practices. Okay. Collective economics, that's another way. So I'm talking about ways that you could be insulated. So I just told you, what can you do? Financial literacy, that's your superpower. That's number one. Okay. Make sure you educate yourself. Make sure you understand the fine print, and make sure that you have the knowledge. Invest in yourself in whatever capacity. Y'all, let me tell you something. I believe in investing. I got a PhD, a public high school diploma. Okay. So I didn't go to college. I don't have a post-secondary education, but I made millions, 8 figures. I made over my life. I made millions of dollars because I had to educate. I made some great investments, made some bad investments. I've had all the gamut, right? But it came from the investment that I had to make it myself. If you only want to just look at free programs, that's fine. This right here is great. But do some, go a step further where you can get more mentoring, more coaching. You got to be willing to when you look at Think and Grow Rich by Napoleon Hill, when he talked about the all those millionaires that why, what was a common thread? They were obsessed, and they were willing to do what it took to become knowledgeable. They were obsessed with their success. So if you got to eat, sleep, breathe, drink, whatever investments, whether it's big or small, whether it's with me, the Black Business School, Boyce, whomever is out there, whoever has the information that really aligns with you and what your purpose is, put your money where your mouth is. You are your biggest commodity, and you are your biggest investment. So, invest in that financial IQ. That's going to be paramount. So you think about the money you saving up front, but this is really money that you could be saving in the back end by having the knowledge to be able to kind of sift through those things that may cost you millions or thousands, we'll say thousands, or maybe even hundreds of dollars later. Okay. So second thing is support Black owned credit unions. The third thing is you can form financial accountability groups. I thought about this. I said, what can they do? How can they do it? We talked about, I think somebody said one time, a susu. Right? You have a group of people. And I think I mentioned last week on here when I was talking about how Barry Gordy's family had like a susu, and they would just all put their money in a pot. Barry Gordy, came from a very financially astute family. His parents were, business owners on finger on a pulse. And instead of putting their money in a bank, they put their money in a pot. And every time somebody wanted to buy a house or they wanted to invest, they would say, okay, we'll take, money out the pot and we'll give it to you, so that you can invest. And that's how Motown was formed. So if you can come together collectively and maybe form these accountability groups where you can just, you don't need a Constance Carter to form an accountability group. You might need me to guide you and coach you, but you have each other, right? So, you guys could be researching together, get with your tribe, your family, your friends, your church group, and you review your financial documents, maybe collectively. Okay. Get a second pair of eyes on that. That's something that you definitely can do. And then, get in there and vote. That's huge, because the reason why these people are in here, and that's the thing too. It's like the regulation. It's like, it's that we need a happy medium, because I don't want to be so regulated where I can't make money or I can't do certain things that benefit me as a business owner. Right. But I don't want to be so deregulated where, now it's the wild, wild west. And now my people are being negatively impacted. Where is that happy medium? And so what's going to end up coming down the pipe, you guys, is that you're going to start to see some things. Wall Street is happy. The Silicon Valley is happy. They're unhandcuffed. But what that means for you, they like this. They like, what's baby? They like baby. They rubbing their hands together. They putting some shit together right now to see how they can get some money from you. And so you're going to have to be vigilant about that very thing to make sure that you are not a victim. You are not a victim. And so, just do business with people who look like you. I own a mortgage company. I own a real estate company. And I was thinking about this too. So I'm only licensed in DC. No, my real estate company is DC, Maryland, and Virginia. So I could, my team, right? Could be me, could be somebody from my team, could work with you anywhere. Or in those places, right? DC, Maryland, Virginia. But then I have a mortgage company and I'm licensed in Maryland and in California. I'm not licensed in DC. I'm only licensed there. But I was thinking about this because I know even on, the financial tip with mortgages, like it's hard to find somebody that you could really trust. And I take pride in the fact that I know that people could trust me. So, and I have people all the time that say, hey, do you work in South Carolina? Are you in Arizona? I'm like, no, sorry. I could maybe refer you to somebody or find you somebody. But what I'll do is, if you really want to work with me, I will have my team will get licensed in that area. So that we can work with you to make sure that we're looking out for your best interests, so that you are insulated, so that you don't have to be a victim of that. Because that's the only way that really I know that I can help you personally, right? But also vetting people. You need to vet certain people and make sure that, you're asking the questions, that you do your homework, that you do your research, get into accountability groups, get, proper training, coaching, and mentoring, join the B1 Real Estate Mastery so that you'll know exactly who to talk to, how you talk to people, what to ask, what questions to ask, all of those things. Like, you need to know all of those things. So, if there was now I'm not super excited about getting licensed because in other areas, because that takes a lot. I could do it, but I'm not like saying, yeah, come to me, I can help, it's going to help make me a lot of money. It's just, it's something that I want to do for the people that I love, which are people who look like you guys. So I'm willing to do that, put my resources behind, getting a team together in those areas where, I could help you to be able to, get a mortgage or whatever. Cause that's what I do. That's one of the things that I do outside of doing this. But the reason why, I've been talking nonstop about this is because this is what I am super duper passionate about. This is what I know, like the back of my hands. Like this is how I've helped people, and to see our people potentially losing our wealth. Because in 2008, we lost 50% of our wealth, Black people. In between 2005 and 2008, with the mortgage crisis, I think we lost 53% of our wealth. And thank God, I don't know if after COVID, we made the biggest gains with home ownership and wealth building out of every other ethnic group. So that's great. But we lost 50% of our wealth. And so I don't want to see you do that. I want to make sure that you guys are protected, insulated, and all that stuff. So that's my heart. That's just me talking like, okay, this is how I can help you possibly. Okay. Oh, quickly, you went to my Broke to Woke class. I love it. That's what's up. I love that. Thank you, Rebel Loan Team. We have a hard money company. Let's connect. Let's do it. Let's do it. And what states do you work in, Rebel Loan Team? And that's the thing too, is I'm definitely willing to create strategic partnerships just so we can help more people, because I know that I have a voice that reaches, thousands of people. And I'm willing to create strategic partnerships so that we can create a network for our people. So I'm just putting this out there like right now. Let's create a network of entities, whether it's other mortgage companies. You want to work with me so that we can help people, and I can vet and make sure that you ain't taking advantage of people. And then I can refer people to you, and that will be even better. But that's what I want to do. That's my contribution. Another contribution to helping us to be able to close this wealth gap. So don't forget, you guys, I'm getting ready to head out of here, but I have a gift for you, 87948. Download, you can do that, and we'll send you 6 ways to increase your credit score quickly. And let me just read through these comments real quick to see if anybody has anything. These institutions dragging people again. MAGA, yeah, right. Chaos and confusion. Yeah, they're not making they're making the rich richer. That's the only thing that they're doing. And we are being marginalized as not the super ultra rich. So you guys follow me on Instagram. You guys could DM me on Instagram. I'll be trying to check that other inbox. Like if I'm not following you, it'll go to the other inbox, but I'm gonna try to check that frequently. So I am Constance Carter on Instagram. Yes, doer. Let's see. Most East Coast, just a few states not in. Okay, let's connect with me. And then my email, constance@constancecarter.com. Shoot me an email to Rebel, and maybe let's try to connect there and see what we could do to try to put some things together. Okay. But y'all, listen, we got to continue the conversation. You got to share this with somebody you love. Continue the conversation about how we could be insulated. You notice that a lot of Asians don't vote. They don't have a high voter turnout. Why? Because they're insulated, regardless of what goes on. They are insulated from a lot of these practices because they do business with each other. Okay. We have to start doing business with each other, and then we have to start trusting each other. Like I've never been a believer about trying to get rich off of one deal. And that's the thing about it. So the way I train my agents, let me just tell you this, I'm gonna get on my soapbox real quick, because the reason why I was able to build this great team is I was able to show my agents different ways to make money, right? So not only could you sell homes, but you could also originate loans. So you have two of those options. But part of that is we didn't have to get rich on selling and on originating loans, right? Because we were already doing the house part. So that was an extra added benefit to our clients. And so we were able, because if you're just originating loans, and this is for the average consumer, a lot of lenders get paid more based upon the interest rate that they give you. Yeah. So like a lot of brokers, the higher the interest rate is, the more money that they end up making on the back end that you don't even know, that you don't even see. So we never charged a super lot on that for our clients, because we was already making money on the real estate side. So we didn't have to get rich on the loan side. So we were always able to offer very competitive rates or beat everybody else's rates. So it was a win-win for everybody. It's a win for my agents because they were able to make more money than they ever made anywhere, right? Because they have this opportunity to do more things. But this is also a win for our clients because we're able to get them in a home and then get them in a loan and then beat everybody else's rates. So that is the kind of practice that I try to incorporate. How can I help my people make money, but how can I also help my clients to be able to get the best that they can? So that's what it is working with me. I'm going to get out of here because I appreciate y'all. I really, really, really do. I'm about to get on Fly Nubian Money. We're going to talk a little bit more about these this stuff about what's going on with the administration and everything. So this is going to be a good conversation. I'll be hosting the Fly Nubian Money. So make sure you tune in about an hour to Fly Nubian Money. And we're going to talk about that. And before we get out, I love you guys, like for real. And I appreciate you guys just jumping on here. I know I got people on the West Coast, it's 8:00 in the West Coast and y'all be on here rocking with me. I'm on the East Coast, it's a little bit later. It's 12 o'clock, but it's 11 o'clock when we hop on. And I appreciate you guys just always just being here every single day. Hundreds and thousands of you guys are on here every single day. And I appreciate it. I don't take it for granted. And I don't take for granted that you like to sit here and listen to me rant and rave about some shit for an hour that I'm really passionate about. But my passion really stems from my love for you. Before we head out of here, I want to show you guys the Black History nap. We got the Black History spotlight of the day, and so I'm doing that every single day this month. And then I think I'm going to do it once a week, because there's a lot of Black history, y'all. Black history wasn't just slavery, wasn't just civil rights, Martin Luther King, Malcolm X, and Rosa Parks. We have so much rich history that, even as I'm researching, I'm learning. So I got a lot of good stuff for you, but I think I'm going to keep it up. I can't do it every day because this shit take a long time for me to produce. But I will continue and doing it once a week, once Black history. That's my commitment. But here's the Black History Spotlight of today. Did you know that an enslaved Black man built a steam engine powerful enough to move a warship, but he was never allowed to get credit for? Yep. Let me introduce you to Benjamin Bortley. He was a self-taught engineer who was out here building machines at just 16 years old while he was still enslaved. But because he was Black, because he was a slave, he was denied a patent for his work. So let's talk about how he still found a way to make history. Benjamin Bortley was born enslaved in 1830 in Maryland. And even though they tried to keep Black people from learning, Benjamin was too smart to be stopped. At 16 years old, he started experimenting with scrap metal, using things like a gun barrel, pewter, and steel to build his working steam engine. And guess who noticed? The U.S. Naval Academy. They saw his talent and they put him to work, letting him assist in scientific experiments, but not as a free man. Then in the 1850s, Benjamin took it to another level. He built a steam engine powerful enough to propel a warship's cutter at 16 knots. I have no idea what that is, but it was faster than most ships were at the time. But here's the problem. Enslaved people were not allowed to hold patent. Yep, that's right. They stole that man's inventions because legally he wasn't even considered a person. So instead of getting the recognition he deserved, he was forced to sell his engine just to buy his freedom. But Benjamin didn't stop there. He took that money from his invention along with extra earnings from his work, and in 1859 he bought his freedom for around $1,000. And then he kept pushing forward. He became an instructor in the philosophical department at the Naval Academy, using his knowledge to educate others. Benjamin Bortley's story is just one example of how Black excellence was stolen, it was hidden, and it was erased. They didn't want us to own our brilliance, but guess what? We built it anyway. They didn't want us to hold patents, but guess what? We invented anyway. And today, we are still reclaiming our history because they can't erase the truth. Now, if this story blew your mind, drop a Black fist in the comments. And if you already knew about Benjamin Bortley, tag somebody who needs to hear this. Because Black history isn't just the past, it's the foundation of the future. And let's make sure we keep telling our stories. Hey, I got somebody text me, was like, you ain't supposed to be using Snoop. I was like, damn, I forgot. Anyway, I'm going to see y'all tomorrow. Same time, same back channel. I love you, love you, love you, love you, love you. Make sure you share, subscribe to the channels. Put that Black fist up there if this is your first time, or just put the Black fist up there anyway. Just show your solidarity and your support. What we're doing here with Boyce and the Black Business School and all the things that we're doing, because our love for you is real. So yeah, we are resilient. Thank you. Thank you. Thank you. I love y'all. I love y'all for real in real life. I'll see you tomorrow. Same time, same